Welcome to County Portal, your simple source for local government services and public records. Let's get started.
What is your federal tax classification? This is a fundamental question that every person in business in America needs to answer, because it tells the IRS exactly how to tax your income. It's not the same as your filing status, like single or married filing jointly. Your tax classification is about how the IRS views you as a taxpayer, whether you're an individual employee, a freelancer, or a formal business entity. Let's break down the main categories. The most common classification is an individual, which for business purposes is a sole proprietorship. If you receive a W-2 from an employer, you are taxed as an individual. If you are a freelancer, an independent contractor, or run a small side hustle without forming a legal business entity, the IRS sees you as a sole proprietor. This is the default. You and your business are one and the same for tax purposes, and you report your business income and expenses on a Schedule C with your personal 1040 tax return. Next up is a partnership. This is the classification for a business owned by two or more people that hasn't incorporated. A partnership is a pass-through entity. This means the business itself doesn't pay income tax. Instead, the profits and losses are passed through to the partners, who then report their share on their personal tax returns. Then we have the corporations. A C corporation, or C-Corp, is a completely separate legal and tax entity from its owners. The corporation pays tax on its own profits at the corporate tax rate. If it then distributes profits to its shareholders as dividends, those shareholders have to pay tax on that money again on their personal returns. This is often called double taxation. To avoid this, some businesses choose to become an S-Corporation or S-Corporation. An S-Corp is also a pass-through entity, like a partnership. Profits and losses are passed directly to the owner's personal tax returns, avoiding the corporate-level tax. However, S-Corp have stricter rules than other structures, like limits on who can be a shareholder. Finally, there's the Limited Liability Company, or LLC. This one is tricky because an LLC is a legal structure created at the state level, not a federal tax classification itself. The IRS lets an LLC choose how it wants to be taxed. By default, a single-owner LLC is taxed like a sole proprietorship. A multi-owner LLC is taxed like a partnership. However, an LLC can file paperwork with the IRS to elect to be taxed as a C-Corp or an S-Corp instead. So, knowing your classification is critical because it determines which tax forms you use, what your deadlines are, and how you pay your taxes throughout the year. Thank you so much for watching. If this video helped you understand your tax situation a little better, please hit the like button and